and a warm welcome to this week's market update by Zenergy. My name's Scott. I'm the Market Insight and Flex Manager here. Today's date is Monday, the 11th of April, and I'll be taking you through the markets, what's happened over the last week, what to expect this week, and what the other energy commodities have been doing. And then we'll end with some final notes. So the first graph you can see on your screen is the gas wholesale prices. This is trailing over the last 6 months, and it splits it into your typical 12-month, 24 and 36-month price range in the different colors there. The box on the left just shows the price movements week to week. The reason I split them out this week is there has been a shift in dynamic in the way the markets have moved. So we're seeing prices come off quite a bit in the short-term picture, but longer dated contracts are showing some real resistance and not really moving at all. So your 1-year contracts for gas wholesale costs are down 13%, whereas a 3-year price is only down 0.2%. So quite a bit of difference there. And that backwardation in the market is just weakening ever so slightly. So it'll be interesting to see if that trend continues. Reason for that, the supply picture in the short term and the short-term fundamentals have improved over last week, and I'll come on to that in the next couple slides. But over the longer term, fears still remain on the supply picture in general, and those fears haven't really changed week to week. So that's why that resistance has remained longer term. Power is very similar to the gas graph I just showed. In actual fact, a 3-year price for power has actually gone up 0.4%. That's why I've highlighted it in red just there, just to illustrate that. We have seen prices come down on the 1-year and 2-year range, and the variation between all those 3 years are very different. So yeah, again, the backwardation in the market is just weakening ever so slightly there. And similar to gas, the supply picture has improved short term, so we've seen that come down a bit. Okay, so what's happened and what are the key events over last week? I've got 4 kind of key topics to run through. So the first one is the gas flows into Europe by Russia have been very stable. There were fears come the start of April that may not be the case given the payment dispute and insistence of payment in rubles, but that actually hasn't come into play thus far. There are still some concerns that may be a factor towards the end of the month or possibly into May, when they are expected to pay for April deliveries, many EU nations. But as I say, as a moment, gas flows have remained very consistent from Russia, which is good. There are still obviously the threat of possible sanctions as the war is ever ongoing. That's always going to be an issue. So that's kind of capped losses to an extent. The next one was the UK announced its national energy strategy. This was on Thursday, and its focus was very much on the long-term position. So we're talking targets anywhere between 2030 to 2050. So there are certain targets being made there. Because of that, and as a result, it actually didn't influence wholesale prices too much in terms of movements there, just given just how distant some of the targets are. There was some expectation of some shorter-term targets and strategies, but the strategy really didn't cover much of that. So it didn't really change anything in terms of our short-term picture in the markets. Next is oil has been coming under a little bit of pressure. So we've seen oil a few weeks ago run up to around $129 per barrel. That's now just hovering above 100 and has for the last couple of weeks. It is coming under pressure from rising COVID cases in China. China is the biggest importer of oil in the world, and their policy on COVID is normally a lockdown. So that is causing some demand destruction there in the country, and that is putting oil under pressure. The other key reason is the USA are releasing strategic reserves into the market just to try and ease the tightness of supply in the oil market. So that is putting pressure on oil, but it's still holding above $100, and that will be a psychological kind of barrier there for investors. If that does fall under $100, it'd be interesting to see where that then goes. Lastly, there was an update from EDF on their nuclear generation forecast for spring, and it was reduced. So this was actually a bullish factor in the markets. So cracks were found at the Flamanville 1 and 2 nuclear plants, and this resulted in EDF reducing their power forecast for spring. So we've seen Q2 prices and Q3 prices just go up a tad because of that. They're the key events from last week. Let's just look into energy commodities at a greater detail. So we can see the price of Brent oil here and coal. Firstly, starting with oil, as just mentioned, it's trading just above $100 now. It's expected to come under a bit of pressure this week, and if it does touch under $100, we may see that actually pull back a bit. But it's a very tight market. There's still other factors in play to suggest it might hold out at that value. So yeah, this week will be quite interesting to see. Next is coal. So coal actually has run up a bit in price over the last week or so. With the growing move away from Russian gas by certain countries, coal is obviously in the short term seen as a solution. So sourcing that is becoming more competitive in the marketplace. So yeah, that's probably one of the main reasons we've seen coal trade up, just as it's seen as a more flexible energy solution in the short term. Next is carbon certificates. We can see the price of the EU and the UK carbon market here. That again has gone up towards the back end of last week. And this actually is quite linked to the price of coal. So if commodities like coal are being used more, they are more carbon intensive, which means carbon permits as a result are going to be needed more, which just makes that market even more competitive in terms of sourcing the permits. So the two are interlinked there, and we've seen that run up in price a fair bit. So the EU carbon market is now trading a touch over 80 euros. As we can see, the UK one for quite some time now is trading above that, around 90 plus euros when converted into euros. So we can see the change in dynamic there. If you do have any further questions on the markets, please feel free to contact our Market Watch Live team. They're available between 10 and 12. And we also have our website, marketwatch.energy.co.uk, which you can access at all times to see the latest updates in the markets. Thank you very much.